Let's continue. So this is our accounting cycle. Asan ba dito ang ating topic? Ang topic natin is adjusting entries, so we can find the adjusting entries in the middle of the cycle. Okay. Please take note, class. Nasa middle ito. So if you will um, relate this to our body, ang adjusting entries is parang yan ang ating puso o heart ng body, okay? So this is the center, okay, adjusting entries. So this is very critical dahil kahit na tama yung ginawa natin up to the posting and trial balance, kung hindi natin nagawa properly ang adjusting entries, we will not be able to come up with the good presentation or fair presentation of our financial statements. So this is really very critical, okay? Okay, so what is the purpose of adjusting journal entries? Adjusting entries are journal entries to update and correct the amount of accounts to ensure that financial statements, income statement, and statement of financial position are fairly presented. Okay? So, the purpose of adjusting journal entry is to get both income statement and statement of financial position to be presented fairly. Okay. Adjusting journal entry will involve one nominal or income statement account that will be expense or revenue and one real or statement of financial position account that will be asset or liability. So, anong ibig sabihin nito? So, basta gumagawa ka ng journal entries ng adjusting journal entry, normally, yung isang account is income statement at yung other account is a statement of financial position account. So, ang ibig sabihin is that we are trying to correct nga yung financial statement, kaya ganoon yung pinaka-basic rule ng adjusting journal entry. One income statement or that can be expense or revenue, and one statement of financial position that can be asset or liability. You will see that later in our illustration. Adjusting journal entries can be prepared at any time, but all adjusting entries for the reporting period must be recorded and dated within the reporting period. So yung adjusting entries, pwede natin gawin yan anytime of the year. So kung ang reporting period natin is January 1st, 2017 to December 31st, 2017. So in that period, pwede tayong gumawa ng adjusting journal entries. Okay? However, dapat lahat ng adjusting entries natin, okay, gagawin natin within that period. Kaya normally, ginagawa kasi yung adjusting journal entries at the end of the reporting period. Kaya ang ang pinaka-common na date na nagagamit is December 31st, 2017. Normally, para sabihin na adjusting journal entries yun, basta nakita mo na yung date, basically you will have an understanding that it is an adjusting journal entry. Okay? So, kung 2017 yung fiscal year mo, or I would say calendar year, ang date is December 31, 2017 for normally, that is the date of your adjusting entry. Okay. Three types of adjusting journal entries. We have estimates, deferrals, and accruals. In as much as we will be discussing estimates on this video. So estimates is about to record estimated decline in value of receivables and fixed assets. So fixed assets would mean your non-current assets. And these are your building, equipment, furniture, vehicle, and other non-current assets. Okay? So here on estimates, ang ating i-adjust, okay, gagawa ng adjusting entry is on receivables and on fixed assets. Okay. So on receivable, ang i-record natin is the estimated amount that could not be collected as expense under the account budget's expense. So we will illustrate that. So nire-record natin in making an adjusting journal entry for receivable is magkano ba yung hindi makukolekta, and we will record that as a bad debts expense. And also, we will record with regards to non-current assets, we will record the estimated amount of the decline in value of building, equipment, furniture and fixtures, vehicle, and other fixed assets due to wear and tear as expense under the account depreciation expense. So for your non-current assets, ang record natin is yung decline in value. And yung decline in value, ang tawag dyan is depreciation. So we will record that, we will compute the depreciation, and then record the decline in value as depreciation expense. Okay. We will do an illustration, okay, on receivable and bad debts expense, okay. So if these are our accounts, so alam nyo na to, we have the real or permanent accounts, and that is your statement of financial position accounts, okay? And you will have your nominal or temporary accounts, and these are your income statement accounts, which in you will have your revenue and expenses. Okay, so class, the first one is on receivable and bad debts. We will make an adjustment. Okay, so receivable and bad debts. So the intention is we will record the estimated amount of receivable that could not be collected as expense. So pag-aralan natin yung receivable. Out of this receivable, magkano ba yung hindi natin makokolekta? So we will estimate the amount that could not be collected for the year. So in this case, yung estimated amount, we will decrease accounts receivable. So ang ibig sabihin, we can record that as a reduction. So we can record it as an allowance for doubtful accounts. But there are certain situations that we can record it directly o i-credit natin directly as accounts receivable. You know that allowance for doubtful accounts, the normal balance of allowance is credit, right, class? And the decrease, the estimated amount that will not be collected is recorded as bad debts expense. So we are transferring yung amount na hindi makukolekta dito sa bad debts expense. So ano yung concept? We will debit bad debts expense because we are increasing bad debt expense for the amount that will not be collected, and we will credit accounts receivable or the allowance for doubtful accounts, whichever. Okay, we will discuss that further. So class, with that class, we will be able to comply with the rule on adjusting journal entry. One real and one nominal account. So in this case, accounts receivable or allowance for doubtful accounts, and the nominal account is the bad debts expense. Okay, let's continue the illustration. At the end of the accounting period, the collectability of accounts receivable is reviewed and analyzed. Okay? Receivable that could not be collected is presented as an expense at the end of the accounting period as bad debts expense. Two methods to record adjusting journal entry of receivables that could not be collected. The first method is direct write-off method, okay? And the other method is allowance method. Okay. For example, for direct write-off method, specific customers can be identified. Sa mga meron kang receivable, sa mga may utang sa business, pwede mong ma-identify mo sino sa mga customers ko ang hindi makakabayad. So in this case, in our illustration here, Mr. X has an account of 2,000 and he passed away. So in this case, yung situation kay Mr. X, si Mr. X may utang sa business, pero wala na siya. So obviously, mahirap na, wala nang magbabayad ng utang niya. So in this case, you were able to identify Mr. X. So you can use direct write-off method kasi you can specifically identify the customer. Okay? So adjusting journal entry for direct write-off is that you debit the bad debts expense of 2,000, yung amount na feeling mo hindi makukolekta, and you can directly remove that from your accounts receivable by crediting it 2,000. Okay, so for direct write-off, you used the accounts receivable as credit directly, okay, to remove it. Okay, class? For allowance method, it is based on estimate, normally expressed in percentage. Okay, hindi mo ma-identify kung sino yung specific customer. So you are actually estimating it. Okay, so the estimate is normally based on percentage. So ganito yung presentation. 5% ang hindi ko makukolekta of the gross receivable. Or it can be on the net accounts receivable. So ano ba ang difference ng gross accounts receivable at net accounts receivable? Okay. Ang accounts receivable gross, okay, ganito ang presentation niya. Accounts receivable gross is the total receivable. Yung accounts receivable net is equal to accounts receivable gross less allowance for doubtful accounts. Okay. So if the estimated bad debts is 5% from accounts receivable gross of 100,000 as bad debts, so ang adjusting journal entry natin will look like this. So first, we have to compute 5% of the gross. Anong gross natin? 100,000. So 5% of 100,000. Okay. In this example, hindi given kasi yung allowance for doubtful accounts. So hindi siya kailangan at this time kasi yung ating estimate is based on accounts receivable gross. So our adjusting journal entry is we will debit bad debts. Magkano ba yung 5% of 100,000? The 5% of 500,000 is 5,000. So we will debit bad debts expense, 5,000, and credit allowance for doubtful accounts, 5,000. So if our recording of adjusting journal entries on allowance method, then we will credit allowance for doubtful account. Hindi natin i-direct sa accounts receivable. Bakit? Kasi hindi naman natin identified talaga yung specific customer. We are estimating it only. Okay? Ano ang reason nun? Para hindi ma-remove sa record. Okay, class? Baka in the near future, bigla namang may magbayad na yung allowance kasi hindi tayo nagre-remove sa record. In this case, normally nire-remove na sa record yung receivable dahil direct na ang pagki-credit. Okay? Okay, let's illustrate that further. Illustration and direct write-off method. So the statement of financial position indicate the balance of accounts receivable of 100,000. So original entry ng accounts receivable, alam niyo naman yan, na paano na-generate natin accounts receivable. We debit accounts receivable and we are generating receivable from our sales. Okay? So if we will look at the T account, nandiyan yung ating accounts receivable. So at the end of the year, on December 31st, it was learned that two customers with total account of 3,000 have no capacity to pay their respective accounts. So na-identify, itong two customers, wala silang capacity to pay their accounts. So we are going to use the direct write-off method. So the direct write-off method is debiting bad debts expense and crediting accounts receivable. So it's ating the account or general ledger, it will look like this. We will record the 3,000 there and then the accounts receivable as a direct write-off, meaning removing the 3,000 from the 100,000. Okay? Okay, and now the allowance method. The record indicated the balance of accounts receivable is 100,000. So ganun din. So meron tayong 100,000 dyan. After analysis, I'm trying to show here, class, that certain problems will provide you na sa record and then yung certain problems will provide you na sa yung sa statement. Okay? So, Here, in this case, it is on the record. After analysis of accounts receivable on December 31st, it was estimated that 7% of the gross accounts receivable may not be collected. So, paano natin i-compute yung ating uh, budgets? So, based at 7%, based on gross, so yung gross natin is 100,000 times 7%, that's the estimate, will give you 7,000. That is your budget's expense. Okay? So the adjusting entry on December 31st using allowance method. So we debit budget's expense at 7,000. Okay, and credit allowance for budgets 7,000. So if we will look at the T accounts, so budgets nandoon, and then yung allowance will be here. Okay, because we created a separate contra account for accounts receivable, and it will be posted as allowance. So alam niyo naman na itong allowance na discuss na natin is basically being deducted on the accounts receivable. So, accounts receivable minus allowance, that will be your accounts receivable net. Okay? This is your accounts receivable gross. So, if you want to compute your accounts receivable net, you are going to deduct the allowance for bad debts. So, accounts receivable net, again, is computed accounts receivable gross less allowance for bad debts will give you your accounts receivable net. Okay. Now let's discuss non-current assets, okay, which will be building equipment and the corresponding nominal account, which is depreciation. So again, let's take a look of our accounts so we can find out nasan ba dito yung ating mga i-adjust. Okay, this is your real accounts, okay? And these are your nominal accounts. Okay, so here, ang topic natin is non-current assets. So, all non-current assets. Okay? And then, ang intention natin is that we are going to record the decline in value of assets due to wear and tear. Ginagamit natin itong mga asset natin ito, kaya bumababa ang kanilang value. Or kahit hindi natin sila ginagamit, but due to the passage of time, nagde-decline ang value nila. Okay. The decrease, so the intention is we will decrease the non-current assets through its contra account. So ang gagamitin natin to decrease the value is the contra accounts. Take note class, the contra accounts ay merong specific description ng asset. So kung equipment, ang contra account niya accumulated depreciation equipment. So ito ang gagamitin natin to record the depreciation in relation to equipment. Sa vehicle naman, ang gagamitin natin is yung accumulated depreciation vehicle. However, please take note class, for depreciation expense, the yearly value is recorded as depreciation expense. For depreciation expense, naka-lump up na hindi na ina-identify kung equipment ba yun, vehicle, it's not necessary. What is important is the accumulated depreciation. Okay, dapat individual siya per non-current assets. Pero sa depreciation expense, sama-sama na sila doon. Okay, the rule on adjusting journal entry, one real, which is the accumulated depreciation, okay, and one nominal, which is the depreciation expense. So in this case class, for these estimates, we will debit depreciation expense and credit accumulated depreciation equipment or accumulated depreciation vehicle or whatever the non-current asset is. Okay? Let's illustrate that. Okay, at the end of the reporting period, the decline in value of assets due to wear and tear should be recorded. The amount of wear and tear is debited to depreciation expense, and the corresponding decrease in the value of assets is credited to the corresponding contra account accumulated depreciation. As I have said, you have to specify anong non-current assets ang didepreciate. Okay, so we have to maintain an account for all non-current assets. okay? A contra account or an accumulated depreciation account for each non-current asset, okay? Three factors to be considered in the computation of depreciation. Okay, magko-compute din tayo ng depreciation. So, tatlo ang kailangan nating information. The cost of assets, the useful life, okay, and scrap value. Scrap value can also be called salvage value. Ano ba yung scrap or salvage value? Ito yung halaga na kunyari hindi mo na ginagamit or at the end ng useful life, ay pwede mo pa siyang ibenta as a scrap. Okay? Pwede mo pa siyang ibenta sa mga nagbibis sa scrap, no? Yung kunyari, kung bakal siya, pwede mo pa siyang maibenta. At yung halaga na makukuha mo doon by selling it, i-consider mo sa computation ng depreciation. So we will calculate the depreciation expense at the end of the reporting period. And the formula is cost minus scrap value divided by the useful life. So ang formula na ito ay ginagamit for straight line method of depreciation. We will only be applying the straight line method of depreciation on our adjusting journal entries. Maraming methods ang depreciation, double declining, sum of the year's digit, but we are going to use the simple method, which is the straight line method. Okay, let's have an illustration. On June 1st, 2018, purchase equipment of 400,000 on account. The equipment has a scrap value of 10,000 and life of 10 years. So if we are going to record this transaction on June 1st, we are going to record the purchase of equipment on June 1st, we will debit equipment and credit accounts payable. Correct? Alam niyo na to, di ba? So here we will have 400,000 on our equipment T account. Now we are going to do the adjusting journal entry, and we will adjust the decline in value of the equipment, and that is our depreciation expense. So we have to compute our depreciation expense. So in computing the depreciation expense, we need to know the cost, the useful life, and the scrap value. Okay, and here in this case, our cost is 400,000. Our useful life is 10 years, and our scrap value is 10,000. By the way, class, may mga problems na walang scrap value. So in this case, depreciation expense is equal to cost minus salvage value or scrap value over estimated life. And then so 400,000 minus 10,000 divided by 10 will give you 39,000 per year. So ang ibig sabihin, we have a depreciation of 39,000 per year. So we have 10 years. So 39,000 times 10 will give you 390,000. Bakit 390,000? Hindi 400,000. Kasi yung 10, meron tayong kuha ang 10,000 as a scrap value. So ang depreciation lang natin actually is 39,000 per year. Okay. Pero the question is, kabibili lang ito ng June 1st. So nagamit ba natin ng 1 year? So hindi natin siya pwedeng i-apply kasi hindi naman 1 year nagamit. So we are doing our adjusting entry at the end of the year, which is December 31st, right? So the date of purchase is June 1st. Okay, but we are doing the adjusting entry, or our reporting period is December 31st. So we are doing the adjustment on December 31st, 2018. So basically, this is not 1 year. So it's only 7 months. So in as much as 7 months, so dapat ang i-apply nating depreciation is only good for 7 months. So how are we going to do that? In as much as this is expressed in year, we have to convert this on a monthly basis. So we will get the monthly depreciation, and we will have 39,000 divided by 12 will give you a per month of 3,250 per month. So alam mo na kung magkano ang magiging depreciation mo by multiplying the number of months, which is 7, to the depreciation per month of 3,250. Okay, so the depreciation expense is 22,750. That is your depreciation expense from June 1st to up to December 31st for 7 months. So our entry class, debit depreciation expense of 22,750 and credit accumulated depreciation equipment 22,750. So if we are going to plug this in, your depreciation expense will go to your as expense, and then your accumulated depreciation will be on your asset account as a reduction to your equipment. Plus, for non-current assets, hindi na, wala tayong direct write-off. Okay? Always, we are using the contract account. Okay, class? Any questions? Okay, class. So, we will proceed with our part 2 and stay tuned. Okay, class. Relax, take a break, and have a nice day. Okay.